Trump taking questions in the Oval Office, sitting alongside the Prime Minister of Israel, Benjamin Netanyahu. And, they got through a lot. And he was asked about some of the mixed messages that may be coming from his administration on trade, on tariffs. When the White House says, on the one hand, maybe they're permanent, it's a new reality for global trade. On the other hand, maybe they're just a bargaining chip and therefore subject to change. Here was the response from the president.
Well, they can both be true. There can be permanent tariffs, and there can also be negotiations, because there are things that we need beyond tariffs.
That follows word today from the president's Treasury Secretary that the administration is starting new trade talks with Japan. Whether Japan could still be spared from the 24% tariff taking effect in a couple of days, that remains to be seen. Japan news comes after Trump threatened even steeper fees on China if it goes through with its retaliatory tariffs. It also comes after another volatile day on Wall Street, particularly volatile. The Dow ended lower by about 350 points, down 349. The NASDAQ was actually up on the day, but during the day, the markets were all over the place. Steep sell-off in the morning. Some, especially over the weekend, were drawing comparisons today to the Black Monday crash in 1987, saying it could be another Black Monday. And it prompted, I suppose, of course, it didn't turn out that way, but it prompted one Trump supporter, Dave Portnoy, to kind of rename it all in the president's honor. Watch this.
Orange Monday. Don't call it Black Monday. It's Orange Monday. And people are comparing it to all these other crashes. This one's the only one that I can think of that's like man-made.
Man-made. All right. Well, as this stock slide does continue and all the volatility is still there, more CEOs ringing alarm bells about the potential impact of the Trump tariffs on their businesses and on our economy. JP Morgan Chase, Jamie Dimon, who's actually been relatively bullish on Trump until this point, considering his history, wrote his annual shareholder letter and put it out earlier today, saying we're likely to see inflationary outcomes in the short term, not only on imported goods, but on domestic prices as input costs rise and demand increases on domestic products. Whether or not the menu of tariffs causes a recession, that remains in question, but it will slow down growth. Jamie Dimon, the hedge fund manager Bill Ackman, getting a lot of attention here the last couple of days. A Trump supporter, Ackman, here's his plea on X, writing in part, the president has an opportunity to call a 90-day timeout, negotiate, resolve unfair asymmetric tariff deals, and induce trillions of dollars of new investment in our country. If, on the other hand, on April 9th, we launch economic nuclear war on every country in the world, business investment will then grind to a halt. Consumers will close their wallets and pocketbooks and will severely damage our reputation with the rest of the world. That'll take years, potentially decades, to rehabilitate. That was Bill Ackman. Even Elon Musk posted a video on the benefits of free trade. He's calling for lower trade barriers with Europe, so maybe there's a split with the president there. The president, though, says that he's staying the course.
In the end, I think we're going to have a world that does a lot better, but they have to respect the United States. And we have an opportunity to change the fabric of our country. We have an opportunity to reset the table on trade.
Here now is Betsy Stevenson. Betsy, a professor of economics and public policy, University of Michigan. She's a former member of the Council of Economic Advisors under President Obama. Welcome back, Betsy. Thoughts about that whole reset the table? I think that is, what Trump thinks about trade. Now it's a matter of what he does, especially in the next few days leading up to Wednesday. What do you expect?
I think we all understand that President Trump thinks somehow trade has harmed the United States. But I just want to start by setting the table this way. The United States has had faster economic growth over many, many, many decades, over a century, than any other country or region in the world. And it has been primarily because we have embraced trade and we've embraced immigration. And so that's the reality. Trade has helped us, and resetting the table is not going to lead us to building a bigger economy. It's going to lead to a smaller economy, as Jamie Dimon said, or at least it'll be smaller in the future because it will grow slower, even if we don't have a recession. Now, what President Trump is referring to is we've lost a lot of manufacturing jobs. Yes. He seems to forget that we've lost a lot of those manufacturing jobs because of technological change. We don't need as many people in a factory.
But even if you think some of the trade deals are unfair, NAFTA and others, it still raises the question about whether this is the right way to go about changing that or fixing that.
It is clear that he is very confused about bilateral bilateral trade deficits. Look, the problem with Vietnam is not that they're somehow harming us or charging some very large tariff. Vietnam has a 1.1% tariff on the United States. We hit them with a 46% tariff.
It's not reciprocal, right?
It's not reciprocal. There's nothing reciprocal about it. And so what is he negotiating for? He wants Vietnam to drop that 1% tariff down to zero? Okay.
Here's what he said. Let me play a clip of what he said on manufacturing at that back and forth with Netanyahu. Here's the president earlier.
You got to build a thing called a factory. You have to build your energy. You have to do a lot of things. I'm giving them energy. We're going to let them build their own power plants. They'll be their own. Essentially, they're going to be in charge of the power plant because our power is not reliable enough. You have a grid that's old.
So that came after what I thought was a good question from one of the reporters in the Oval Office, and we're going to talk a lot about that this hour, is that even if the president's plan is going to be successful, how long is it going to take to implement, and what happens in the interim? That's what led up to that question when he said, well, you got to build a thing called a factory.
Yeah, factories don't get built overnight. They take many years. And let me tell you the thing you're doing. If you're a person considering investing in a factory, you're not thinking about the tariffs this week or next month. You're thinking about what are the tariffs going to look like over the next 30 years. And even then, there's a whole bunch of stuff I don't think we start building in the United States. We do import 97% of our clothing items, our garments. It is not going to be cheaper to start building garment manufacturing in the United States. And to the extent we open any garment factories, I think they're going to have very few employees. They're going to be tech-based firms with very few employees. So I don't think manufacturing employment is coming back here. I think what we're going to see is higher prices. I think we're going to adjust to a world with higher prices. And I don't think we're going to see a big surge in manufacturing. Look, one of the things that's already happened from these tariffs is everybody is slowing down their investments. My 12-year-old son came and complained to me because Nintendo backed off in building its Switch 2 because it wanted to see what was going to happen with tariffs.
Now we got a problem. Yeah.
He's like, it's not just a problem that the prices are going up, but they're not building the stuff because they're trying to figure out how much are they going to be able to sell.
That's a larger point. You mentioned garments and clothing. We actually have a guy who runs a company that does just that. He'll explain the process. Going to be here in New York with us in a few minutes. So that'll be interesting. I think people should stay tuned for that. The other thing, Betsy, the point I wanted to make is, and I've been making it over and over today, but believe it or not, Dave Portnoy, of all people, actually made it, I think, even better today when he was on. We played that comment from him earlier, but this is a more important comment. This is not just about the stock market. This is what Portnoy said earlier. Watch.
You think if I'm losing money or if the stock market's tanking, you think that only affects rich people? We're probably affected the least. Like, yeah, I'm losing 20 million. I'm still got plenty of money. But it all shakes down. It all shakes down. Companies contract. Like, let's look at Barstool Sports, all right? This economy tanks. Our advertisers who do business overseas and sell products and advertise with us, they sell less products. It gets more expensive. What's the first thing they cut? Ad budgets that we got. Suddenly we're not getting as much money. Suddenly I got to fire Nate and lay people off. That's how it works. Like, the rich people are probably the least affected.
Yeah, I mean, obviously someone who works in the media, we think of the same thing. We have a parent company, Nexstar, owns this network, and it's the same concept, right? It relies on advertising. And I think he's right about that. And the question is, how close are we to that point? Or maybe we're very, very close to that point where companies start making those types of decisions.
I really love that he highlighted that. I think too many people are focused right now on, our portfolios are shrinking. People with a lot of stocks are losing money. That's not the point. The point
it's part
is
of
that
it. It's part of it, but yeah.
No, the main point is that the stock market reflects the net present value of future earnings.
Right.
And everyone thinks all these companies are going to earn a whole lot less over the next 10 years.
Yeah, but that goes back to the conversation we were having earlier. It's not going to take if it was as simple as that, they're like, all right, we'll just move this factory back to the U.S. But as Dave says, and other people say, that's not what they would do, at least at first.
If the company has lower earnings, what do they need? Fewer employees. Right? What do they... It's going to mean that's where when we talk about the economy slowing, the economy being smaller, it's that the stock market's telling us everybody thinks these companies are going to be able to sell fewer products. And when you sell fewer products, that means fewer jobs. And there's nobody out there betting that we're going to have a renaissance of growth anytime in the near future.
What about, speaking near future, what about timing on that? Because now is this debate about will Trump pause for 90 days? The Ackman suggestion was, what is the timing on all of this, in your view, before companies start to make those tough calls?
First of all, I think there's already been harm done, and that's super frustrating. But I do think that I don't even think all of the drama is completely priced in. I think there's still a bunch of optimists out there that are hoping he does do a 90-day pause, that are hoping he does renegotiate some of these tariffs, that are hoping they don't always all go in. And so I think if you see these tariffs hit on April 9th, this bloodbath on the stock market is not done.
Probably not.